The achievement-oriented paradox. Here is an undeniable reality that will deeply unsettle any achievement-oriented individual. The more aggressively you work at trading, the more rapidly you will incinerate your capital. I anticipate your skepticism. To most, hard work is the fundamental pillar of success in every endeavor, the cornerstone of mastery and achievement. Yet the market views that belief with mockery before systematically seizing your funds. What remains undisclosed to beginners is that the market does not reward sweat equity. It is indifferent to your hustle and offers no consolation prizes for excessive screen time. The market compensates exactly one thing: being right at the precise moment with the correct risk parameters. That is the entirety of the game. The brutal irony is that by attempting to force success through traditional hard work, you drive the moment of profitability further away. A contrast of two methodologies. Consider the following portraits of two traders. You may find your own reflection in one of them. Trader 1 rises at 5 a.m. for exhaustive pre-market analysis. Fueled by caffeine and the glow of 3 monitors, he scans 50 charts, scrutinizes economic calendars, and monitors social media feeds. He reviews a dozen indicators and fills notebooks with observations. By 9:30 a.m., he is in a position, followed by another at 10:15 and a third at 11. By the closing bell, he has executed 8 trades. He feels productive and alive, convinced he has worked hard. His account, however, is down 4%. Trader 2 wakes at 8 a.m. and opens a single chart. Noticing his specific setup is absent, he closes his laptop and heads to the gym. He returns at 2 p.m., sees the setup still hasn't materialized, and takes 0 trades. To an observer, he appears lethargic and uncommitted. Yet his account remains unchanged, which, in the arena of trading, constitutes a win. In this field, the absence of action is often the most sophisticated expression of skill. Why the standard formula inverts, most ambitious people struggle to accept this. We are conditioned to believe that more hours and higher output lead to superior results. This formula holds true in academia, sports, and traditional business. However, trading is the rare environment where this logic doesn't just fail, it inverts. Here, more results in less. Effort becomes interference, and hard work manifests as self-sabotage. Until you grasp this, the market will continue to drain you while you wonder where your dedication went wrong. Let us dismantle the lie and examine how hard work kills traders, not because effort is worthless, but because it is being misapplied in destructive ways. 1. The overtrading trap. When one decides to work hard at trading, it usually manifests as hyperactivity, taking more trades, hunting for more opportunities, and staying glued to the screen. It feels productive, but the market does not reward participation. Taking 10 trades does not make you 10 times more likely to profit than taking 1. If only 2 of those setups were high probability, you simply gave yourself 8 extra opportunities to lose money. By being more active, you systematically erode your win rate while inflating your exposure to risk. A surgeon does not improve by performing unnecessary operations. A sniper does not gain accuracy by shooting at every shadow. Yet, when wired to believe effort equals results, sitting still feels like failure. You click, you enter, and you lose because you confuse busy work with profitable work. Sitting on your hands is actually the highest form of trading discipline. 2. Analysis, paralysis. The second way hard work destroys you is through over-analysis. You see a setup, but because you've been studying hard, you feel compelled to check 50 different variables. You scrutinize RSI, MACD, Fibonacci levels, and institutional order flow across multiple time frames. By the time your analysis is complete, one of 3 things happens. The move leaves without you. You talk yourself out of a winner because one minor indicator disagreed, or you work so hard that you find data to justify a terrible trade. Bruce Lee famously feared the man who practiced one kick 10,000 times, not 10,000 kicks once. The master of one simple strategy will always dismantle the hard worker who has a surface-level grasp of 50. Complexity is a disease disguised as sophistication. The more you know, the harder it becomes to act. 3. Emotional exhaustion. The third killer is the most insidious: emotional burnout. Spending 12 hours reacting to every tick of the price action puts your nervous system in a state of hypervigilance. Your brain is not designed to process this level of sustained intensity without fracturing. Soon, you are making decisions from a state of total depletion. Your discipline evaporates and your system becomes merely a suggestion. Trading while emotionally drained is like driving intoxicated. Your judgment fails and you see patterns that do not exist. One clear-headed decision made after a full night's rest is worth more than 50 decisions made during the 11th hour of a screen marathon. The best traders I know actually work less than everyone else because they realize their mental clarity is their primary edge. Their emotional stability is their alpha. Redefining what work actually means. If traditional hustle is poison, what does the market actually reward? It rewards 3 specific things: a clear system, unwavering discipline, and ruthless patience. The system. The real work isn't collecting strategies, it's refining one and following it with absolute consistency. This involves establishing objective, binary criteria for entry, exit, and position sizing. Once the rules are set, the work of strategy development is done. The discipline. This is where 95% of traders fail. The real work is following your system when it's boring and frustrating. The discipline to do nothing when there is no signal is worth more than any technical skill. This is psychological labor, and it is exponentially harder than staring at a chart. The patience. As Warren Buffett noted, the market transfers wealth from the impatient to the patient. A hunter doesn't shoot at every rustling bush. They wait for the perfect shot. The best traders might take fewer than 5 trades a month, but they trade with size and conviction because they waited. The invisible work of self-awareness. There is hard work in trading, but it is invisible. It is the work of understanding your own psychology. Most spend hundreds of hours on technicals and 30 minutes on themselves. The real work is asking, what triggers my impulses? How does my ego affect my sizing? This requires journaling and brutal introspection. The market isn't your opponent. You are. Every broken rule and revenge trade is the instance of you fighting yourself. Until you do the invisible work of mastering your internal patterns, you will keep repeating the same failures regardless of how many hours you put in. Why the best traders look like coward society teaches us that winners are aggressive and bold. In trading, the opposite is true. The masters look like cowards. They don't bet the farm, and they rarely trade. What looks like cowardice is actually mastery. Survival is the goal, and survival requires treating the market as if it is always one trade away from destroying you. The patient trader who protects their capital is far more dangerous than the hyperactive one who throws wild punches. Real strength is the control to say no to 99 mediocre opportunities, so you can say yes to the one that actually matters. The art of subtraction. Trading is an art of subtraction. Success comes from removing unnecessary indicators, emotional reactions, and the need to be right. Every instinct says, do more, but the market demands you do less. Imagine a calm lake reflecting the sky. That is a clear mind. Frantically stirring the water to be productive only distorts the reflection. Clarity, not effort, is what generates profit. When trading feels exciting or like hard work, you are likely doing it wrong. When it feels boring, systematic, and like simply executing a checklist, you are doing it right. The shift from output to process. To succeed, you must redefine your work ethic from output to process. In most jobs, more sales equals more success. In trading, following your process is a win, even if the trade loses money. You are no longer working for immediate results. You are working for long-term consistency. Mastering one setup and executing it with 100% fidelity 100 times is deep work. It is harder than jumping from strategy to strategy, but it is what creates wealth. The final truth: hard work, the wrong kind, destroys your account. The wrong effort is over-trading to feel productive and over-analyzing to feel smart. The right effort is following your system religiously, cultivating patience and protecting your mental state as your most valuable asset. If you have been grinding harder while results get worse, this is your wake-up call. The market doesn't want you to hustle. It wants you to be still. It wants you to be precise. The moment you stop confusing activity with progress is the moment you stop being the trader who works the hardest and start being the trader who wins.